Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's take a look at the gold market as usual. So on the gold market, the overall situation not really very impressive and fascinating. Actually, on the daily chart we have nothing special, no some really cool patterns. So we have actually this ABCD pattern. The only important moment that we have here is the relatively easy breakout of the confidence support that was around 1290, 13 even area. So we briefly have talked about it in recent videos within the week, but on the daily chart that could become very important, because when the market breaks the confidence resistance with no significant respect of it, and actually guys here I'm not sure that was definitely the respect of the confidence, because market actually has bounced from the daily average sold. It's in these levels. 1287 was even slightly lower than the confidence, and maybe this reaction was mostly on the average sold condition rather than on confidence support. And this just makes market really bearish and lets us to see that the bearish pressure on the short-term perspective on the daily chart stands really strong. Also, on the weekly chart, guys, we have some important observations, and you could read it in our weekly research and analysis on the weekly chart, that doesn't match actually to normal behavior of the bullish market. So the reversal of the market at the point above 1326 target, actually market has turned down in the 1360 area, so 55, 60 area. That was significantly higher than all resistance and targets that have been met previously. And actually market has interrupted the upward action in the free space where there was no real significant resistance or something of that sort. So that mostly has happened surprisingly and unexpectedly. And that is not really normal for bullish behavior and bullish market. When market stands on the bullish swing and it already has passed through some significant resistance point, it should not occasionally interrupt the upward action and turn in the opposite direction and drop below the previous broken area. Also, there are some other mismatches exists there. So at that point, mostly on some strong bearish sentiment that right now exists on the market, compared to what we see just on the chart. So the visible effect looks not as strong as it could be based on the price action that we see within the last 3 weeks on the gold market. That in turn leads us to conclusion that probably gold market hardly will stop at the current levels where it stands and should continue move slightly lower, at least to the next significant support area. As on the weekly chart, as on the daily chart, the next significant support stands at 1260 to 1265. This is next few level on the daily chart, but on the weekly chart this is also confidence support. As weekly confidence, it already will be a significant area. Also, it will be, as you can see, daily average sold, and maybe on the weekly charts also will be average sold. Besides, guys, even based on the pattern that we have here, this A, B, C top, somewhere in this area we have the minor extension, 61 extension, 61.8 extension is minor nearest target, and usually when some steep ABCD pattern is forming on the market, it should hit at least the minor extension. So that's why it's all signs that we see on the daily and on the weekly chart mostly point and suggest another leg down. Meantime, on the intraday charts, guys, there are still some hope exists for the bulls. Actually, could call it as last hope to show the meaningful retracement up, but it will depend on how market will respond to important point. So if we'll take a look at the 4-hour time frame chart, what signs we have here? Here we have some bullish grabber that has been formed on Friday, and also this is some kind of the wash and rinse of the previous low. So market has grabbed, stops below these lows and returned it back up, right? Also, we have here some kind of the bullish divergence, but I'm not sure that's very reliable since it has been formed not at some significant support that has no significant background. It's just it's hanging in the area, so in the air, so without some free space. That's why I do not like very much such kind of the divergences. Well, the grabber itself is also not very impressive because I prefer grabbers on a way in a direction of the major trend. So, for example, when the market shows in the bearish trend, I prefer grabber on retracement. So the market will show some minor retracement here, and the grabber forms in a direction of the previous trend. But here we see some kind of the reversal grabber. So when this market just retesting the previous lows and formed the grabber. This is a bit weaker type of the grabber that has been formed. But appearing of the wash and rinse open door for a possible bullish pattern on the hourly chart. So wash and rinse could lead to forming of the double bottom in the gold market. It's not very often happens on the gold market, but wash and rinse is very typical for the double bottom because it very often happens when the second bottom shows the wash and rinse of the first bottom and return it back up. So how to recognize that this double bottom could work? Upward action here, guys, should be relatively fast. So it should not be such kind of action. Sideways, flirting here, some kind of the whipsaw action, it will just increase the chance on the further downward breakout. But this action should be relatively fast, something of that sort, at least maybe even faster will be better, so will be the advantage. And market should relatively fast to recover right to the necklines, approximately 1288 area. If this will happen, indeed, we could wait for higher upward action, higher retracement, and the target of this pattern will be, as you can see, distance between the neckline and the bottoms, counted in the direction of the breakout from the neckline. It's approximately 13 even area. So that's the last chance for the bulls, last pattern that could be formed here. If we will see some kind of very weak action, heavy actions, market turns to the flirting, sideways, no upward acceleration, that will increase chance of the further drop. And of course, if market will drop right in the beginning of the week below these lows, chance of double bottom will be destroyed. And in this case, if market will break the 1276 lows here, we should be ready for the further drop to our next daily support that stands at 1260, 1265. That's the trading plan that we could create for a coming week, at least the first part of the week on the gold market.